this afternoon we're going to talk about building the next great fintech. We'll just go around, get the esteemed panelists to introduce themselves before we start.
Okay, hi, my name is Robin Lee. I'm the CEO and co-founder of HelloGold. HelloGold is essentially trying to build what I loosely call the BlackRock for the underserved and the unbanked in emerging markets. And because we're looking for customers in the emerging markets, we decided from the very get-go that we would be Sharia compliant, because if you want to be financially inclusive, you should not exclude any segments of society. We've been in business since April 2017. We've been live in Malaysia. We have 70,000 customers, and we've just launched in Thailand this year, and we plan to launch in the Middle East and Africa later on in the year.
Okay. Yeah. My name is Wajeeha Awadh. I'm from Baraka banking group. I'm responsible for digital banking, fintech, and the entire digital transformation. The bank is one of the largest Islamic banks globally. We exist across Africa, Europe, and Asia. I think that's all from my side.
Hello. Hi, Assalamu alaikum. My name is Yousif Mirza. I'm the CEO of CrediMax. CrediMax is a company specialized in card issuance and acquiring from a merchant side. We've been in business over 20 years, and we have a significant approach towards embracing customer experience by providing the best quality service in Bahrain.
Bhaskar?
Hi, my name is Bhaskar, and I'm the co-founder and CEO of WeInvest. We are a B2B2C fintech, and what we do is we enable digital wealth as a business model for banks, asset managers, and brokers across Asia and the Middle East.
All right, so when we talk about innovation, entrepreneurship, and startups, one thing that obviously can't be ignored is financial technology. In 2018 itself, we've basically seen different numbers, 55 billion invested in fintech. Wajeeha is telling me that it's 111 billion,
111.
According to KPMG. So this is obviously an area that can't be ignored. However, if you go to things like this, events like these, like investor days and stuff, you keep on seeing sort of similar startups presenting their products and solutions, such as payment solutions, investment management, investment analytics. So what we're going to talk about today is how do you actually build a great fintech? What does that require? And what sort of external and internal factors that makes a fintech a great fintech? So let's start off by having our esteemed panelists define what they think a great fintech is. Perhaps Robin, you'd like to start.
Well, I think you got to start with the problem, right? The problem that you're trying to solve, whether it's on a B2B level or whether it's on a B2C. And certainly for us, we identified from the get-go a fundamental problem around the world, which is that for most people, whether they're unbanked or underserved, they do not have the ability to save towards a better financial future. Either because the products aren't accessible to them at the price points that they have, or the challenges of convenience becomes a huge problem. And coupled with that, the inability to get access to liquidity, because the other issue that a lot of people face is they have to save, but bad things happen to them. Their fridge breaks down, their motorcycle breaks down, and they have to break into their savings to fix that. Whilst all these problems are actually solved for the rich. If you're a rich person, you have the ability to get financing from your investment portfolio. So for us, we took that as the fundamental building block to build a solution to address these problems for our target market.
So, all right, so then from a banking perspective, what do you think? I mean, obviously you'd like to either have financial technology built in-house or partner with a fintech. So what do you think makes a great fintech from your point of view?
I think it really depends on which market you're talking about. So it really differs the strategy from a market to another. For example, in Turkey, we have our own incubator and accelerator where we deal directly with fintechs. And I think, back to your question, is that it's a very simple answer. It's either a problem that you solve or it's an opportunity that you tap into it. Mm-hmm. So if you fall in one of these categories, then you are really building a great fintech, I think.
And from your point of view as a credit
From my point of view, a great fintech that addresses the needs of the customer and bridges the gap between the consumer and the financial institutions when it comes to banking and financial institutions. Mm-hmm. There must be a proper business case where there is a purpose, as Wajeeha has said, could be an opportunity or could be a problem. So in order to build a great fintech, you need to address that, have a proper business case, and then you go, because there is a gap between what the customer got used to over the years. Recently, with the social media, with the big giant companies coming in, customers are used to very easy, flexible way through the apps, whereas the banks and financial institutions still lag behind. So the fintech will come in between to bridge that gap.
Okay, and Bhaskar, what are your views?
I mean, I'll go back to what I believe are 3 tenets of any good fintech solution, right?
Okay.
The first and most important thing is you've got to be simplifying a certain problem, right? It could be through great user experience. It could be through enriching a certain process of how a client goes through a certain experience, be it in investments, be it in payments, or whatever it is. So simplification of the experience is one of the, I think, paradigms of all new age fintechs. The second piece is efficiency, right? You got to make it extremely efficient. I mean, we've been living with a lot of legacy infrastructures, but technology has moved at such a significant pace that there's so many ways of doing what would take, for example, weeks to onboard a client to now potentially it getting done in a minute or a couple of minutes, to investments taking, for example, weeks to execute, to potentially it getting done within 30 seconds to a minute. So efficiency is where a lot of what I call the grunt work of the technology part of a fintech happens. The third part is obviously the cost, the service point of how you're delivering a service at a fraction of what it used to take. So whether you take it Apple Pay or Samsung Pay, which simplifying the experience at no additional cost and extremely efficient because you're able to do everything, or things like what we do, which is called wealth management or self-service advisory, where it used to take weeks to get a process done, but now it's done on a mobile, so it's simple within 20 minutes. It's understandable, it's efficient because within half an hour your whole portfolio is set up to, again, at a cost point, which is again a fraction of what banks or advisors used to charge. So I think those 3 tenets kind of sum up what I would call a great fintech.
Great fintech. Okay, so obviously, as we can see, the cornerstones of building a good or great fintech is addressing a problem, having the solution being simple and efficient. So taking that into perspective and sort of funneling it down, what sort of trends do you guys see developing in the fintech sector across the globe, and what sort of what kind of need does the fintech sector, does the banking sector need in this region, and how can fintech address that?
Okay. I think the banking sector,
Yes, come on.
Okay.
This is a
Okay.
free
I
conversation.
think from the banking sector side, it's always good to, expand your business lines.
Yeah.
Okay, we've been in the industry for a while, and, the product has been always the same. But I think with fintechs, it's time to actually innovate and come up with the new business models and generating new revenues. And that could be really working closely and collaborating with these fintechs. So I think collaboration is a good way forward, and especially if you tap into the existing ones and you just, create a revenue line for you through these startups.
Obviously, there are, like I said earlier, there was also external factors such as environment regulation that plays into building your startup or your fintech startup. So how much of that actually helps a startup become, great?
Okay.
Yeah.
Now, if I would speak from Bahrain perspective, we have open banking regulation, which requires the banks to open their data by June 2019 to all these fintechs and startups. I think this gives an opportunity for these fintechs to tap into a new businesses with the banks, but at the same time, it's changing the bank's business model. So that's the effect of regulation on us.
Robin and Bhaskar, coming from another emerging market, what sort of things do you see that are similar and that can also be applicable for fintechs in this region?
Well, I think what's happening in Southeast Asia and around the world applies everywhere, including the Middle East. First of all, everyone wants to get into banking in some shape or form. I mean, I think it was Bill Gates that said, we don't need banks, we just need banking. Yeah. And you see a lot of mobile operators, non-banking institutions coming into this space and trying to monetize their customer base. And that's creating pressure on banks, and banking industry typically, is quite slow in innovating. But now, because of this pressure, they're trying to get ahead of the curve again. I think more fundamentally, I think a lot of banks are looking at defining what their core businesses are, because I think for many banks in the emerging markets, they've tended to be everything to everyone. Yeah. And now they've got to figure out what is sustainable business for them. And my guess is things that are relationship driven. Mm-hmm. What is transactional, and those are potentially areas where they will collaborate with fintechs, because the cost to serve is much higher for them than it would be for a tech player or for a mobile operator. So I see these trends happening not just in Southeast Asia, but also in the region.
Okay, and Bhaskar from
I'll kind of
Singapore, what do you...
go back to part of your question because I think that's related. So if you take in terms of trends, banks and financial institutions first thought of fintechs as threats. I think that has dramatically changed over the last 3 to 4 years. It's become a lot more of collaboration, because I think banks have started to think about the real threat is actually from big tech, which is an Alibaba or a Facebook or an Amazon, starting to provide services where their primary core could get threatened in terms of over a 5 year. And you see that, for example, Lufax is already in Singapore launching their own wealth management services. Mm-hmm. So a lot of the perception of threats has changed in that sense, and therefore collaboration has come in. In terms of how that is applicable and changing or across Southeast Asia and here, I think it goes through the same, what I call education, exploration, analysis, paralysis kind of a situation, right? We've been kind of going and knocking doors in banks and other financial institutions for over 5 years in Southeast Asia, and it's taken at least a couple of years for that whole facade of saying, are you a partner or a threat, to change. And I think the same is happening here in the Middle East, where I think we were part of the DIFC High, but we also see the fact that lots of financial institutions are now trying to say, okay, let me go and adopt and partner with certain solutions to be able to kind of leapfrog a certain typical evolution of services and try and get to the same level as what it happens. So that evolution, I think, is definitely getting faster here in the Middle East. However, regulations, that's a completely different matter, right? Every fintech or bank obviously needs to be aware of how some of this, when we talk about simplification, I think the biggest threat of simplification is what does the regulations allow you to do and not allow you to do, and how do you push those boundaries?
on that note, on regulation, so obviously that is one sort of challenge that most fintechs face when they, want to build their companies. So from your point of view, having built, your own startup companies, what challenges do you commonly go through in building that?
I think it starts with the regulation. We spent at least 2 years meeting so many regulators across Southeast Asia, and then in Dubai, and now obviously across the Middle East. And I think if that openness to being able to tweak or push the envelope in terms of what's typically been the standard is not there, it would really slow down things. A classic case in our space of wealth management is, let's say, Hong Kong and Singapore. Both of them tout themselves as huge hubs from a wealth management space and also from a regulatory kind of governance space. But Hong Kong, from a regulatory perspective, has been extremely slow in terms of guidelines and ability to kind of push the envelope, versus Singapore has been the other extreme of being extremely open and allowing a lot more experiments, be it sandbox or guidelines. And the difference is perceptible now in 3 years. And similarly, that whole, what's called openness, if it's not there in the regulators.
So for you, the main part of it, the main challenge is regulation and environment. So for you, Robin, what was the main challenge you had to face when you were building HelloGold?
Oh, that's actually a really interesting thing. Because gold is a relatively simple financial product to manufacture, there's very little regulation involved. Having said that, for us, we took the approach that would be very open regulators as we go into each market. I think the biggest challenge is that regulation never contemplated this kind of paradigm shift in how things are done. And so even if the rules ostensibly permit certain activities, the regulators are kind of a bit reticent to allow you to play. And then they're also not able to give you guidance because they never contemplated having to deal with something like this. So oftentimes, it's a journey where you're trying to educate them as to why you're replicating something that already is allowed in a slightly more efficient form. and then they have to go back and think about these things, think about the risk to the marketplace, to the customers, etc. And I think it's
So basically,
tough.
it's understanding of the product itself. The
Actually,
solution itself.
the product is not understand. Regulators, apologies to any regulators out there. My only thing is that I used to be a regulator too, so I understand the reticence. Regulators are not paid to take risks.
Yeah.
And so it's challenging for them to undertake something that's completely new in the time frame that you as a startup require. And that's, we push them very hard, and they want to do it. So you have one arm of the regulator being very pro-innovation, but you have the other arm which is responsible for market protection, customer protection.
Mitigating risks.
And those two things don't sit well together.
So obviously, partnering with fintechs is what financial institutions aim to do to create a more symbiotic environment. What are the challenges do you, Yousif, and Wajeeha see in partnering with fintech companies?
Well, initially when the fintech emerged, the banks and financial institutions were skeptical about it, and they were resisting it. Then they adapted a strategy for acquiring small fintechs, and that also proven to be a failure. Reason that these small fintechs are very agile, very quick to act. Once you put them under a bigger umbrella, then the hierarchy of decision-making kicks in, so you actually kill that innovation and creativity. So now I think now the banks and financial got to a stage where collaboration, as the right gentleman said, is the right way forward. I can speak about CrediMax itself. We, 2 years back, partnered with one fintech company where we address a problem, or we solved an issue with the government of cash handling. We actually, in some government ministries and authorities, we totally eliminated the use of cash. So that was 2 or 3 years ago that we started the deal. So to me, fintech is an opportunity. It gives me the arm and the competitive edge to reach and give the customer the frictionless experience they want. That's how I see it.
Okay, so your experience has been fairly positive. Wajeeha, what about you? How has it been working with fintech? What are the challenges that you face when you approach them and work with them?
I think I would emphasize on the point that you have to explain it sometimes to the management for them to understand, because after all, fintech has been really in the industry for recently, So explaining it and how the value of this and what is the return on investment, it takes a while, of course, to convince everyone and all the stakeholders involved. So that was a matter. Another matter which Yousif has just mentioned here is that the cultural shift, even the employees themselves need to understand that what is the change that is happening to them. But going forward, as an example of what we did in Baraka, Turkey, is that we found that there is a new market which we can tap by actually collaborating and partnering with a fintech company. So we launched a fully digital bank in Germany, based in Berlin, by partnering with Solaris, which provides banking as a service solution. So really choosing the right model for the fintech to go further with as a business line was another challenge, but we had so far successfully gone with our digital bank in Germany.
Okay, so one more thing that I would like to touch on is, so as we're embarking on Industry 4.0, what do each of you think should be at the forefront of everybody's minds going into the next 5 to 10 years in this space?
I'm really passionate about Islamic finance. I think for too long, finance has been driven by the Anglo-Saxon model.
Yeah.
And Islamic finance, I'm not Muslim obviously, but it's ethical financing. There's an opportunity to reset how people look at finance and how to make a more equitable society using the tenets of Islamic finance. And that's why for me, the tech space now and being here is fundamentally important, because we have the opportunity to make finance truly inclusive and beneficial for everyone, and not just for those that have enough money in their wallet. And I think the next few years, we can either go back to the status quo ante and be business as usual, serving the more affluent, the more privileged, or we can completely rechange everything at a global level.
But that's exactly what everybody's trying to do, basically, financial inclusion, and that Islamic finance or SRI is basically something that could actually reach that target market. Wajeeha, sorry.
So adding
Back to you.
on Robin's point as well, I think there are new technologies in the market, which it's good to be leveraged within the financial industry. And here I will be speaking about artificial intelligence and IoT, Internet of Things. So I think by utilizing these technologies, you will just make the financial services better to the customers. And in fact, you'll be, making that more friendly, if I would speak from that term, and better quality of services. So leveraging these technologies will be the way forward, I think.
Okay, and Yousif, what was
Well,
the
I'm
striking
very
thing?
passionate about payments. We are in the payments industry. So I think the trend is moving towards having more of a easy to do business with when it comes to payments. So the plastics, some people say, will disappear. I disagree. It will remain for a while. The fact that some parts of the world has developed, some parts has not developed, but the fact that people travel around the world, they will be faced one way or the other with the use of plastic. So it is moving towards contactless, towards mobile wallets, peer-to-peer, transfers. Yet again, this will be there for quite some time. If you can imagine when the cards with plastic were produced, it remained for 50 years with magstripe. Then the chip came and it revolutionized the way people chip and pin came. Now, emergence of digital payments. So I think it will go, but the digital has not replaced the chip and pin because there are still big parts of the world, including here. And basically, one of the aims is to fight cash. And cash is a burden on the economy, burden on the individuals. And that is where payments, digital payments, comes into the play. Yes.
Okay, and Bhaskar.
I mean, again, from a version 4 or
Striking
5 or
things.
whatever you call it, I see 3 primary kind of shifts. The first I call is mass personalization. Typically, most financial solutions or products were what is called, I have this whole bunch of things on the rack, I'm going to take it to you and give it to you, all 4 of you, more or less. I mean, even if it's cards, I have 3 types of cards. If it's investment products, I have 5 kinds of. Now with a lot of data, a lot of computing power, a lot of what's called algorithmic power, we are able to kind of mass personalize it. And there are examples across credit pricing, there's examples across investments and robo-advisory where we're able to literally mass personalize an offering of a product to each individual. That's one big tenet which is just, I think, just going to accelerate a lot more. The second piece is what I call data-related insights and effectively being able to predict and do a lot more from an experience perspective. Today, for example, we are able to look at data and kind of suggest saying, you're really not going to be able to meet your financial goals based on this, right? And we're just at the tip of the iceberg when it comes to the amount of things that you can do. So what are the 3 suggestions to change your lifestyle / spending patterns / investing patterns to be able to do that? And this is happening across a variety of things. It's happening across lending in terms of pricing. It's happening across investments in terms of suggestions as to how do you manage your money better. It's happening across other aspects. And the third part is what I call experience and the way experiences are going to multiply and change across so many different channels. Earlier, to invest, I would have to go to a website or first go into a branch, but now I can go to a website, now I can go to an app. Tomorrow, you're going to get it on your smartwatch and contactless stuff where you're able to do everything. So there's, with what you call API-driven economy or shared open banking APIs, you're going to have an explosion in terms of the channels in which you're going to get serviced. So those are the 3, what's called big
Okay, so
ticket trends.
the last thing that I would just want to ask all of you. So obviously, building a great fintech revolves around building a customer experience that is engaging and interactive and simple. So if there was an advice that you could give for startups in managing that aspect of customer experience, what advice would you give? to further fine-tune and, you know, make a startup different from another?
I think just very simple, just making sure that whoever your end customer is that experience is as simple and as easy as possible. So effectively, they don't even have to think about it. If you think about what Uber or Kareem can do, right? That ability to just do that transaction in like 2 clicks of the button, I think is fundamental. I think if you can do that and continue to iterate towards it, making it, you know, just something that's completely intuitive, that creates the right kind of user experience.
Simplicity and intuitiveness. Wajeeha, what do you think?
I think I'll add on this
Okay.
is that, now be putting it in a banking perspective, is that I recently read something called that banking should be soon invisible, okay, which means that you don't disappear, but you're actually embedded in everyday life, you know, of a customer life.
Yeah.
And that could be really achieved through fintechs, because what you do after all, as a customer, all what I want is that all the services is there when I want it, and very simple to use it. I don't need to know that it's a bank or a fintech behind it.
It doesn't matter.
It doesn't matter.
As long as it provides you the service and the solution that you want.
So be invisible, but be there.
Yeah.
I think that's the thing.
Yousif?
To me, there are 3 ingredients for success. Startups or banks or financial, superior quality of customer service should not be compromised at all, and fintech comes into that space. Launching new products and services, otherwise your products will be outdated soon and someone else will take over. And of course, embracing and having technology and the right set of skills within the workforce that will enable you to compete in such a rapidly competitive market and growing technology that outpace many of the banks and financial institutions.
I would have a simple rule of 5. If I'm not able to cut down the cost by 5 times, if I'm not able to deliver a product in 5 months, if I'm not able to kind of get 5 clients whom I pitch an idea to who says this makes sense, if I'm not able to cut down the time it takes to do a process by 5 times, if I don't meet at least 2 or 3 of this,
It's all about
don't do
costs
it.
for you.
This time is cost.
How does that connect with customer experience then?
Exactly,
Because
because
we're trying to-
earlier, for
Yeah.
example, let's take simple onboarding. If I were to
Yeah.
get on board in a bank,
Yeah.
I would fill the same form or same details in 5 forms, and it would take me easily half an hour, even if it was a relationship manager doing it. If I'm not able to do it in 3 to 5 minutes, then I've not simplified that process.
Right, so obviously all these things are intertwined. Simplicity, being embedded in customer lives, talent, and cost.
Something as boring as onboarding is that. There's obviously a lot
Sorry?
more. Something as simple as onboarding is
yeah.
that. But there's so much which can be done from a user experience which is softish. The language you speak while you're actually kind of getting someone to do some pieces, to the visual image.
That goes back to simplicity and efficiency. All right, we basically have 1.5 minutes left on the clock. If anybody has questions for our panelists, perhaps? No? Right. I guess we can all adjourn for lunch.
Thank you.
Thank you very much.
Thank you.
I hope that was informative.